Good to be here, Sarah. So if you look at the first glance in today's reactions, it looks like more of a virus headlines going on. There are a lot of risk, uncertainty around reopening. So it appears today's trade more like, lockdown versus, reopening place. I mean, we're seeing more investors are more rotating towards more of a, again, lockdown basket from reopening, more reversing their short on some of these reopening names. But if you look at more deeper into that today's reaction, it's not that investors are all going all in on this quiet Friday, post Thanksgiving. More, it's pretty low volume and even a low volatility. But if I look at Zoom, the concerns of investors right now about the growth, for next year, as you said, now 54% to is this low to mid teen or high teens grower or 20% grower. I think some of that concern probably investors has, and once they guide for next year, that will come back. But our view is that the Zoom is a 20% plus grower, mainly because of, the concern is that online segment, which has high churn, they already de-risked that with they set the lower expectation. But this kind of event today is like the variant coming back. It kind of reinforces that Zoom is an essential tool. It's a productivity tool. I mean, I talked to some of the small businesses as well recently, and in fact, one of the convention organizer I was talking to, OSA convention, they're going to that will be held in July 4th weekend. They were saying like this, even if they can meet in person, they are doing it, over Zoom, this organization, because it's more effective. They're working on it. So I feel like as we are getting to more of a, business reopening and with this kind of concern coming in, it's becoming a new normal. Like work from home is becoming a new normal. So that is essential, and Zoom is going to be here and probably more of a 20% plus grower.
Isn't it possible to even agree with all of that and the central place that Zoom is going to play and say over 40 times 2023 earnings, it's still a little bit too richly valued?
Yeah, I think that was one thing is that as growth decelerating, a lot of investors expecting, with high teens grower, what's the multiple? That's why you see the multiple contraction. That's why stocks going down. But I think, at this point, what is the new normalized growth? That's the question right now. If you think it's a 20% grower and when they will guide in their fiscal Q4, I think stock would bounce back, in my view. Right now, I think more upside will come from estimate than multiple.
CD, thank you very much. Appreciate your time.